Good afternoon, everyone. This is Adeel Rizvi, and I welcome you all to our weekly webinar session. Today, we are going to talk about potential tax savings and how can you make depreciation work for yourself. It's a very, very important topic, especially from cash flow perspective, because a lot of households are stretched right now with the rising mortgages and rising interest rates. So we will dive further into it today. I have a very good friend of mine and a very respectable guest today. But before I introduce them to you, I just wanted to quickly mention, if you're watching this live or if you're watching a recording later on, please share your feedback, share your comments, even share your questions. You can share the questions live over here and we will try to take them if possible. And you can also share them later on, and our guest would be more than happy to answer those questions for you. So, a quick word about myself. I'm Adeel Rizvi. I'm a property strategist, and I help families create financial happiness through safe and scalable property investing. That's essentially what I do, but that's all about me for today. I would like to introduce my friend, a very good professional in quantity surveying world, Mr. George Newen. Hi, George. How are you going today?
Not too bad, thank you very Adil, and thank you, and thanks for having me on, and howdy everyone.
Now, beautiful. When you had to be on, because the work that we do and what you do is so much complementary in so many different ways, and I just wanted to share that with my audience as well, and also with your audience, because what you guys do is simply amazing. So, before we dive into quantity surveying, I just wanted to understand very quickly, what were you doing before you entered into quantity surveying?
So I did my uni studies, finished my degree in HR, never really pursued it, and just worked odd jobs here and there, and I think my last recent job was I did project management, and then didn't really like it. Always had an interest in property investment, and saw the opportunity to join Dual Tax, and yeah, here I am now.
Beautiful, beautiful. For to make it easy for our viewers, just in very simple words, what is quantity surveying? Because it sounds very, very technical, but what it really is about?
So quantity surveying is part of the construction industry. So as quantity surveyors, we work out the wear and tear of the property and also estimate the construction cost of how much it would cost to construct the buildings or infrastructures.
Okay, so essentially, what you are doing is that you are figuring out if someone has actually built an investment property or if someone has renovated their investment property. You are actually figuring out how much that cost was and how much would that
Correct.
appreciate in terms of time over the years. Is that what you're
Correct.
doing?
Yes. Yep. Correct. Yes.
And how does that help me, like if I'm an investor? I mean, I know how it really helps, but I'm just trying to educate our audience as well. So how does it help me as a property investor to come and get your services?
Okay, so only quantity surveyors can prepare tax depreciation schedules, and with the tax depreciation schedule, is how it works is it's a one-time report. It lasts for 40 years on the construction of the property. So we work out the wear and tear of the property. So when you buy an investment property, in the report you get a tax deduction on your property each full financial year, which you can use that tax deduction and use it to offset against your taxable income when you take it to your tax accountant when you're doing your tax return. So really, you're getting a bigger tax return off your investment property.
Okay, so essentially, and what it means is that whatever we have spent on our property and making it better, whether it's building a property or renovating a property, we can actually claim that as a depreciation from the tax man, from the ATO.
Yeah.
Is that right?
Yep. Correct. Yep.
Okay, and for us to do that, we need to get a tax depreciation schedule. That's what you mentioned, isn't it?
Yes, that's very correct. Yes.
Okay, is it
Yep.
like a big schedule of like big spreadsheets, or what does that really look like?
No, 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 no. So it's just a report. It will just have a few. It will just have numbers of how much deduction you can get, and it will explain to you what is the tax depreciation schedule, and it will have the building costs, division 40 and 43. So division 40, which is the plant and equipment, which will have your cooktop, your ovens, your
Dishwashers,
air
your hot water
conditioner, your
system, and all
dishwasher.
those
Yeah,
kind of
yep,
stuff.
that's
So we can
correct. Yeah,
actually get
light fittings.
depreciation. Okay, so
Yep,
we can
and
get tax
division
deduction
40.
for that as well.
Yeah, of course, and
Okay.
Division 43, which is the building structure of the property.
Yeah,
Um,
beautiful. No, I'm more than happy to share my example. Like I've known you, George, for several years now, and we have work together a lot because we work with a lot of investor clients, and I am an investor myself.
Yep.
And very recently, I mean, for the couple of properties that I bought for myself in the last 1 year, your company has helped me provide the depreciation schedule for those properties. So one thing I wanted to clarify as well: depreciation schedule is something you only get for a property once. You
Yep.
don't have to get it every year. Is that right?
Yes, yes. So that's actually one of the things that customers do ask me sometimes. So they
Yep.
sometimes will ask me, "Oh, do I have to buy the report every financial year?" I no. The question is no. So it's a
Yep.
one-time report. You buy it
Yep.
once, and it will last you for 40 years
Yep.
on the construction date of the property.
Beautiful. And what that allows us to do is, like, I will share just my example that I got a report of George, and it probably costed me for two reports around like uh, $1,200,
Yep.
and I got the report in like within within a couple of weeks. And the good part of that report is that based on my income and everything, I can actually save at least $3,000 from the tax man
Yes.
for next 10 years. $3,000 roughly every
Wow,
single year
that's
for the
great.
next 10 years.
Yeah,
So
that's great.
that is what the projection is at this point of time. And if my income grows, definitely that will be more savings because I'll be in a higher bracket. But that is
Yeah.
exactly how it has helped me. And those two properties, now a lot of people, let me make this as a question for you, George. Do we need to
Mm.
get a depreciation schedule for new properties only?
No, so you can always get depreciation schedules for both old and new properties. So the rule of thumb is any properties that's built after 1987, you're eligible to get a depreciation schedules. And unless there was renovations done by yourself or the previous owner, you
Yep.
can claim depreciation on both the building and also on the renovations itself.
Beautiful, beautiful. And I'll
Yeah,
just continue with my example now with what George just said. So all both
yeah,
my properties, one of them was built in 90s, one of them in 2000s, which I bought in this year, and uh, combined in total, they will help me save around $3,000 every year in tax savings,
yeah.
and that is like $30,000 savings in 10 years.
Wow,
And
really,
all I
that's
had to
good.
spend was $1,200 for getting those two
Really.
reports. So I
Well,
get a
there you go.
discounted rate from George. I get a very special rate from George. So that's how I got those reports. But now that's just to share with people as to how it can benefit you guys as well. And you mentioned a very important point over here, George, because both of those properties were not brand new for me. As I said, one was built
Mm.
in 90s,
Correct.
the other one was in 2000s, but we still
Yep.
got good depreciation on that. So we can get depreciation reports on older properties. And you shared the
Hmm.
rule of thumb where it should be something which is anything which is built after 1987, right?
Yep, correct. Yes, yes. So, if you're not sure, I'm always happy to provide a free estimate on your properties, and let you know how much you can claim, and I'll let you decide. But otherwise, the rule of thumb is, any properties that's built after 1987 is always eligible to get a
Yep.
depreciation schedule. Yep.
Beautiful, beautiful. And do you want to talk about a little bit more? I want to go around renovation side of things because when property investors buy properties, they may do renovations down the years, and property is an asset they would typically hold for like at least 5, 10, 15 years before they
Yep.
eventually think of selling it. And during that
Yep.
time, people do renovations as well. So, what kind
Yep.
of renovations can be covered in that if you want to highlight some of those?
Uh, Renovations could be replacing or installing new or putting in new, like let's say your ovens, your cook stove, your range hood, uh, air conditioners, new light fittings, solar panels, even new floorboards, and renovating kitchen, bathroom, living room. So really anything that's anything to do with building related. So if you like I said, if you do any renovations, then depending on what you do and how much you spend, uh, the more the better, I would say. Means
Yep.
the more tax deduction or the more depreciation you can get on the renovations on your investment property.
Yep. No, very true.
Yeah,
That's good. That's good. So
yeah,
let's say if I buy an investment and if I decide to add a patio in it after a few years,
yeah.
or if I try to replace a hot water system, right? If it
Yes,
breaks
yeah,
down, I have to replace it. Can I also get depreciation done for that
correct.
replacement
Yep,
items as
yep,
well?
yes, yep, yes, you can. Yep. Yeah, yes, you can. So just another example is had a client came to me recently, bought an old property too, just built around the the 1990s, and the previous owner did some renovations to the property, and the current owner didn't know how much money was spent on the previous renovations. So that's as one of these phase as ourselves, we go out and determine how much renovation was done on the current property that they've purchased,
Yep.
and yeah, and as a result, they were as a result, because the client wasn't sure if it was worthwhile or not, and we had to look at the property, and as a result, the client was able to get about maybe $5,000 to $6,000 in tax deduction for the first full financial year, and the client was
Wow.
quite happy with the result and decided to go ahead with the depreciation schedule. Why not?
Yeah. I mean,
Yeah,
that's a no-brainer to spend like $600 for a report, $700 for a report, and get 5,000 depreciation in the first financial year only, and it
yeah,
continues. It's not something you have to spend every year. It's a
no,
one-time cost. So no, that's good.
yeah,
I wanted to come back to renovations, and a lot of people will do renovations for home improvements, but there
yes,
are also which can be deducted, which can have a tax depreciation schedule, and we can deduct it in tax. You have confirmed that. But what
yeah.
about people who are doing maintenance in their investment properties? Let's say who have a
Uh,
leaking bathroom and they have to repair the bathroom, and they spend 10
uh,
grand on.
so fortunately, we don't depreciate repairs and maintenance, only on renovations only. So we don't depreciate, yeah, repairs and maintenance.
On any kind of improvements, right?
Yes, only improvements made to the property we can
Yep.
depreciate it, but any repairs and maintenance, no, we cannot.
Okay, fair enough. Now that's
Yeah.
understandable, just so that people know what we can and cannot do. And do you guys provide depreciations for residential investments only or for commercial as well?
Both residential and commercial, as long it's a building, we can depreciate
Oh yeah,
any building.
it does not need to be a car, like not a commercial car.
Not a car. No, 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 no,
Not a truck.
not cars, no cars.
No,
Just
that's good.
property related
No,
building.
that's great. That's beautiful. And
Yeah.
also, I wanted to touch upon another very important subject. People who own their own homes,
Mm,
or they have bought an investment property
yeah.
previously and now they're looking to build a granny flat.
Yes.
People, they want to build a granny flat in their own home where they live in as a
Yeah.
secondary source of income, or
Of
people who
course.
want to add a granny flat into their investment property.
Mm, mm.
What can be depreciated from that cost of building that granny flat?
Uh, Both the building and the plant and equipment, as long as used for an investment, we can depreciate granny flats too.
Okay,
Yeah.
beautiful. So if I live
So
in my own home and I
yeah.
have a bigger plot where I have, where the council allows me to put a granny flat, I get all the
Yes.
approval through the council. I build a granny flat, I engage a builder, drawings, all that kind of stuff. The granny
Yep.
flat is ready. Once it's ready, I can come to you and I can say, man, can you give me a depreciation schedule? So even though I'm living on the property which is right next to it, on the
Yes.
same lot, I can still claim depreciation on a granny flat on my own lot of land where I live, right?
Yep. Correct. Because your granny flat is a property itself, so you
Yeah.
can depreciate on the granny flat.
Amazing. That is very important
Yep.
because a lot of people ask me that question, that if we add a granny flat into our property, what can we do? What are the tax benefits of that? But that is a very important point that you have raised. I think that's
Yep.
very valuable. Also, for people who did not know about depreciation schedules and they bought a property, let's say 5 years ago,
Mm.
and if they come now and if they want to understand, sorry, if they want to understand and want to get a depreciation schedule done, can it be backdated from the time they purchase the property? Is it possible?
Yes. Yes. Correct. Yes. So the ATO allows us to backdate the report to two full financial years. But if
Okay.
you like to backdate the report to when you first purchased as an investment property, that's no issues too. But otherwise, we are allowed to backdate the report to 2 financial years.
Okay, so now we know that if you're buying an investment property, the quantity surveyor, the tax depreciation guru, Mr. George, has confirmed that ATO will allow you to backdate your depreciation schedules up to 2 financial years, which means even if you bought your property 2 years ago and you haven't done your tax depreciation schedule, you can even do it today. So get in touch with George, have a chat to them, and get your depreciation schedule done, because I know they provide an excellent service. That's what they've been doing on my properties and on the properties of my clients, Australia wide. And I think that is where people can get benefits even for up to 2 financial years in the past, which is amazing. So I don't
Mm.
think why anyone should not consider doing a tax depreciation schedule if they own an investment property, right?
Yeah. Correct.
Okay, one more thing which people ask me, if their property is a bit older, whether they need to have a tax depreciation schedule done, whether it will really help them or not. So what are your tips for those people who have bought an old investment property?
Well, like you said, if you're not sure whether your property can claim depreciation on it, um,
Yep.
contact me or contact our office, and I'll be more than happy to give you a free estimate on your property and see whether it's worthwhile or not.
Beautiful. That's great, man. That's amazing. That's very kind of you. So if you're not sure whether your property can be used for tax depreciation or for tax benefits. Don't don't worry about getting a report first. You don't need to spend any money. Just get in touch with George, have a word with them, and they can do a free assessment and tell you roughly how much you can save on tax on your property. Or if you can't save anything, then there's no need for you to get that report and spend any money. So I think that's very kind and generous of you, George. That's amazing. How can people
Appreciate it.
reach out?
So yep, you can give me a call on 0481 948 009, and my email address is George, so it's GEORGE at duotax, so DUOTAX.com.au.
Amazing. That's great, George. Thank you so very much. We will share these contact details in the comment section as well. So, guys, if
Yep.
you have been watching this live or as a recorded version, please share your feedback. If you have any questions for George, feel free to post that in the comment section, whether you're watching it on Facebook or YouTube or on LinkedIn. And any of the things that we shared over here, just a quick disclaimer, there's no tax advice around it. It's more about giving you journal information around how you can help your family cash flow and still buy investment properties in these days where the cost of living is so high. So that was just a session just to educate you a little bit. And I thank you, George, for your time today. I think that was amazing. It was really good value. And you offering a free assessment for the property. I mean, that's really generous, man. Thank you so very much for that.
No, I appreciate it. Thank you. Happy to help.
Thank you very much, George. And
Thank
thank
you.
you, everyone, for the session. We are looking forward to your feedback, and we'll be back next week with another session. Till then, take care. Thanks very much.
Thanks, guys. Thank you, everyone, and thanks for having me on, Adeel. Cheers.
Lovely having you, mate. Bye.
All right. Thank you. Bye.